What's up, everyone? So we're going to do discount stores. I forgot to update the video on YouTube. I have to change it so it's monetized, and I forgot to change the thumbnail. Let me just do that, so don't forget. So I'll be doing it on the live stream. I'm changing the thumbnail on the stream. I don't think anybody really cares. There's this AI thumbnail builder. It doesn't really get more views, but it looks better. It does look more professional than my my thumbnails. I'm just updating the thumbnail right now in case you just tuned in. Okay. So I've been making videos of all the companies, like the top companies in a certain industry. So I'm going to do that on this live stream. I haven't done it on a live stream. I've done a regular video. Like I think a couple of days ago, I did the top 20 companies in the marine shipping industry. So what I do is I pull this data from a website. It's called businessquant.com. They actually gave me free access. It costs like, I think $30 or $40 a month. They gave me free access so I can kind of promote it. But I do like it. I do use it every video. So this comes from that website. And I mean, there's like 100 fields they give on that website, but a lot of the fields are kind of meaningless, at least to me. I'll show you the fields. I'll pull up the site. They have a lot of things on this site. I'm not promoting it. I mean, it sounds like I guess I'm promoting it, but I don't really use that much. I just use this industry financial section. So I just pick the industry. Like, for example, when I did the marine shipping industry, and then I usually I pick my fields. So when I did the marine shipping industry, I don't pick the companies. It's industry specific. So if they're in that industry already, like in the marine shipping industry, you have Kirby, KEX. They just kind of upgraded the website, and they've changed a lot of the features. I'm going to email them because now they just have the ticker. They used to have the ticker, then after the ticker, the company name, but they got rid of that, and I think it's better with the name. So KEX, Kirby is the biggest company in this industry. Then Matson, MATX. I don't know all the companies. I know Zim, Integrated Shipping. GOGL is Golden. I don't know, Golden Ocean, I think. But anyways, so somebody commented on the video saying, "How could you do a video on marine shipping, but you don't have Maersk in there?" And it's pretty simple answer because they don't have it in there. Most websites aren't going to give you pink sheets. Like Maersk is a foreign company, and they only trade in the pink sheets in the U.S. So most websites will not provide companies that are on the pink sheets. There might be like in the screener, like you could screen for companies, and if you choose OTC stocks, then yes, they'll give you OTC stocks. But generally, in the main areas for things like this, searching by industry, they're not going to give you pink sheet stocks. There's just not enough data on that stuff. Not to say pink sheet stocks aren't good investments, because if it's a U.S. company on the pink sheets, it's probably not a good investment. But if it's a foreign company on the pink sheets, it could be a really big company. Like Maersk is 23 billion market cap. It's a pretty big company. It could easily trade on the New York Stock Exchange. It's just you have to pay money. It's not that cheap to trade on a major exchange like the New York Stock Exchange, or if you wanted to trade in Germany on the Deutsche Börse, if you wanted to trade in Canada on the TSX, those are major exchanges. So it's just not, it's pricey when you got to pay a few $1,000s for each country exchange. Of course, Google, it trades on like 20, 30 exchanges because they have so much money. But a company like this, they just might not want to spend that money. And also, there's a lot of compliance. When you trade on a major exchange, you have to provide a lot of information. Dylan, what should I type to study about pink sheet stocks? I'm interested in learning as much as I can. So why do you want to learn about pink sheets? Because not that anything wrong with that. I'm just trying to understand. So pink sheets are generally stocks that don't qualify. That's kind of like the definition of pink sheets, or OTC, whatever you want to call it. They don't qualify to be traded on a major exchange. I'll just be talking about US, but they do have pink sheets in Canada. So if it's a US stock and it's traded on the pink sheets, it's definitely a risky investment. So you want to do a ton of due diligence. And the reason it's risky is they tend to be really small companies that trade on the pink sheets. Or they did trade on a major exchange. They did trade on the NASDAQ at one point. Then they got delisted. And when a company gets delisted, it goes onto the pink sheets. But there's a lot of foreign companies that trade on the pink sheets that are really, really big companies. Isn't like Sony on the pink sheets? No, there's a big like Japanese company. Okay, that clears it up for me. I just wanted to be up to speed during my studies. But you could make a ton of money on the pink sheets. I thought you were going in that direction because you could find really, really cheap stocks. Like literally, like you could find a stock for like 0.0001 cents. Like you could put $1,000 and get 1 million shares, but you're buying garbage. It's like you're buying like toilet paper, just flush down the toilet. That's pretty much what the stock is worth. But it is a misconception because when companies get delisted, like that happened to GNC when they filed bankruptcy, a lot of stocks, they get put in the pink sheets and people think, oh my God, it got delisted. I have, $10,000. I put $10,000 into the stock and I lost it all. You didn't lose anything. There's still value. There's still an active market on the pink sheets. Granted, it's a little harder to buy and sell in the pink sheets, but it's not that hard. It's not like if you have a small business, say you have a bakery in your town, that's not a liquid market. There's not an active pool of people looking to buy your business. There's maybe like 2 people that you could find that are going to buy your business. So pink sheets is still a liquid investment. It's still a pretty liquid investment. Real estate is illiquid. But that's a good question. So how did I get on this? Okay, right, Maersk. So whatever this website, when I type in discount stores on this website, whatever they provide is what I use. So they provide these stocks. They just provide stocks that are trading on a major exchange in the US. That's pretty much what they provide. And there's a stock, it's called, the ticker's TBBB. And the name of the company is BBB Foods. And look at the market cap. Well, it's actually not, it's not that small. I thought it was smaller. I don't know, this website's wrong. Another thing to consider when you is that Oxygen? Oxygen, yeah. Generally if a stock trades below $1 for 30 days or an extended period of time, it runs the risk of becoming delisted. That's kind of like one of the famous rules. But you'll find a lot of stocks trade below $1 for like many years. So that rule isn't like a hard and fast rule. What they'll do is the SEC will send a letter to Ocugen saying you're at risk for being delisted. And Ocugen probably, let me pull it up here. And Ocugen probably mentioned it on their website. Ocugen phase 1 consensus price target. Ocugen FDA approval has completed follow-on. Ocugen delisted. Samsung, is that? Thank you. What did I say earlier? Oh, I said Sony. Samsung, that's what I was trying to think of earlier. Samsung is one of the largest semiconductor companies, right? Electronics companies. Sorry. What am I thinking? There's a really big semiconductor company that's trading OTC. Okay. Samsung is one of the largest electronics companies in the world. They 377, they're bigger than Apple times 100 apples. That's a big basket of apples. 377 trillion market cap. I'm obviously joking. It does say 377 trillion, and there's a lot of people who do think that means 377 trillion US dollars. But we know that's impossible because no company, except even most countries, aren't even worth that much money. Just divide it by 100 because it's yen. South Korean wons. South Korean wons to US dollars. So it's actually 27 billion US dollars. Yeah, 377 trillion. 377 South Korean wons equals 27 US cents. Am I doing it? I'm questioning my math. Okay. This is 377 billion. This is 377 trillion. So one South Korean won equals 0.00072. God damn it. 0.00072. $271 billion market cap. So what I said 27, and then I thought 271 in my head, but yeah, so it's 271 billion market cap, which is still a big company. 271 billion. How many companies in the world are that big? Like what, 50? So yeah, so there are a lot of non-US companies that turn the pink sheets that are still pretty big. Anyways, hey, Richard, thanks for stopping by. So what I've been doing I've been making some videos. So I just take kind of like an entire industry like this, give you all the high level stats so you know how big the companies are, and then go into Simply Wall Street and see if it's overvalued or undervalued. So the biggest company in the discount store industry is Walmart, which is the biggest retailer, the biggest brick and mortar retailer in the world. It's also, it generates more revenue than any company in the world, and it employs more people than any entity in the world, Walmart. So up 53.6% in the past year. So what I do is I highlight the company that's doing the best in this column and these two columns. So it's going to change as I go through all the companies. They're trading at 82.51. And now let's see what Simply Wall Street values the stock. This is not common. They're actually saying they're overvalued. Usually Simply Wall Street thinks stocks are like 95% of the stocks on their website are undervalued, and some are really, really undervalued. DG is going down. DG is going down, Dollar Tree is going up. Why do you think that? They usually use a really low WACC. Like that's just disgustingly low. 5.8% is their weighted average cost of capital, which is really low. So this is how you value anything, an asset, a company. You predict future free cash flows. Then you discount said cash flows by the WACC or the discount rate. The WACC is a discount rate. And that's how you value. That's it. That's two steps. I know there's a lot involved in those two steps. You just predict the future cash flows. And this is a really simple way to think about it. I'm going to give you $100 today, but you have to give me $110 in 1 year. It's pretty simple. You know what you're getting. You're getting $100 today, and then you have to give back $110 a year from now. So what's $110 worth a year from now? Well, if you don't do anything with it, if you keep it under your mattress, it's still $110. It probably loses value. I mean, the $100 you get, if you put it under your mattress, doesn't really do anything for you. It won't grow. What I'm saying, it's going to be $100 a year from now. If you buy a stock or you invest it in your business, you can grow it, right? So what's $100 worth today, 1 year from now? That's pretty much what we do when we value a stock. So they use a really low WACC, and the lower the WACC, the higher the valuation, and vice versa. So they predict 10 years of free cash flows, 2025 through 2034. They discount those cash flows, and they do a terminal value, which is all cash flows after a certain point. They discount that number, and they come up with the value of Walmart, 628 billion, and they divide it by the number of shares outstanding, 8 billion. So that's how they get to $78 stock price. Okay, let's see what the analysts say. So 38 analysts, that's a lot of analysts, predict a stock price, a 1-year target. So within a year, it should be 84.49. So they're saying it's not going to move much. And if you have Simply Wall Street, you can see this blue line right here. That's the actual stock price. And this is since 2023. And this purple line is the analyst's price target. So you can see where the analyst's target has moved and have they done a good job. So usually if the stock price goes up, the target goes up. And the stock price goes down, the target goes down. Then analysts aren't usually the best at predicting stock prices, but that's just how it is. So this spreadsheet's a work in process, so I may change it. But the next thing, I list is insider shares sold, insider shares purchased. The Walton family owns a big chunk of Walmart. And you can see it's only selling. There's no buying. Nobody's buying. None of the insiders are buying. So 18 million, it's a lot of shares. 16, so 34, plus 29 is 73, right? 73 plus 19 is 92. So about 93 million. Okay, and this line is just the average, and this line is the median. Okay, do you guys like Walmart? I think it's still a good investment. Retail is not going away. Brick and mortar retail is not going away. It's never going to go away. I don't know why people think that, because online came out. Online came out 25 years ago. Physical retail is still just as strong as it was. There's just more. We're spending more money. There's just much demand. The smaller businesses, the mom and pop type businesses, they will go out of business because not because of online. Partially because of online, but because of stores like Walmart and Costco, and you can't compete. There's like a small grocery store near my house, and they charge almost double, sometimes triple Costco's prices. I mean, it's closer to my house, so that's the only benefit. But I'm not going to go and spend I'd probably have to spend, I don't know, $800 a month on groceries. I'd rather go to Costco and spend like $300 a month or whatever, $250. Okay, so let's go to Costco. And it kills me because I used to, when people ask me for the longest time, like, what stocks do you like? I would always say Meta and Costco. Those are my two favorites. I should have just put all my money into those stocks because I lost money in all these other stupid stocks. And I made a lot of money in Costco and Meta, but if I would have just not tried to play around with the market, I could have made a ton of money. But I digress. Okay, so in the past year, Costco went up 64%, and it's trading at $8.91. So that's up the most so far on this list. But as we go down the list, of course, it's going to change. And now let's look at simply Wall Street's valuation. I mean, these types of videos don't get too deep into the weeds, but we do look at it just from a different point of view. Okay, 974. So the market still thinks it's, or at least simply Wall Street thinks it's undervalued. 974. And you could look at the DCF, but we don't have to do that. Let me know if you have any comments. We can talk about other things. Well, about if you have comments on these companies. So 32 analysts at 933. So lots of analysts looking at these stocks. As we get lower, as we get further down the list, there's going to be less analysts looking at the stocks. And at the really lower ones, it might be no analysts. Let's see the insider activity. I know a lot of people like to look at insider activity. It gives you some information. All selling. No buying. Okay. It's not that much. 17 plus 3 is 20, plus 6 is 26, plus 24 is 50. So about 51,000 shares. I mean, it's nothing relative to Walmart. 51,000. And you can see when they sold, who sold it, and how much they sold it for. So you can see it's $8.91 today. So some of these people sold above $8.91. They sold real recently. But some people sold a year ago at $5.57. So they would have been better off holding it. But they didn't know. At the time, it was trading on its all-time high. But I've done really well in this stock. I'm up like 150%. Probably with the dividend, it's like because they just paid a huge dividend, a special dividend, $5 per share. Employee count is an interesting metric to look at. What I was going to say about insider buying and selling. So you don't have that much information when somebody buys and sells. Like you don't know why they bought and sold. Because if I was selling my business, right, you would think, why is he selling? Is the business struggling? Because it doesn't make sense to sell a business that's doing really well. And if you ever buy a business, the person selling it will always say, it's doing amazing. You could take it to the next level. I just have personal things going on in my life. It doesn't make up every excuse in the book. But generally, if somebody has a business that's making them a lot of money, they're not going to sell it. But when people are looking to sell, it's generally because the business is not making enough money for them to live on. But there are nuances to that. What if it was you're trying to buy from someone that was 75 years old, and they said, my kids just aren't interested in the business. It's still really profitable. I can't physically do it anymore. Even though I have helpers, it just takes too much out of me. That makes more sense than somebody my age or younger in their 30s selling a business. It's kind of like, I can't really make that much up about it. I can't say, I'm getting too old. But the thing is, when someone sells stock or buys stock, when someone buys, it's generally, you pretty much know why they're buying, because they think or they hope the stock will go up. That's pretty much the only reason people buy. People don't generally buy stock if they have a gut feeling it's going to go down. I guess if they're the CEO, they may be manipulating the market by buying it, pretending they think it's good, but I don't know about that. So when an insider buys, they think it's going up. It's pretty much a guarantee. That's what they think. But when someone sells, they probably think it's going to go down, but you don't really know. You don't know why they're selling. They might just need the money. They might be, like they might have some things there to do, like the mortgage is due, or their spouse is having a surgery, or their kids are in legal trouble. So you don't know why someone's selling. They're probably, even if I think a stock is going up, I might still sell it. Things happen in our lives where we need money, and it's hard for people to sell their home. It's easier to sell stocks. Just something to think about. But anyways, okay, let's carry on. So Target, that's the next stock on the list. TGT, 41%, up quite a bit, and it's 151 the last price. So all the stocks so far are up a pretty good amount the past year. Simply Wall Street, 281. So they say it's pretty undervalued. That's in the lead now. Let's see if the analysts agree with that. With Simply Wall Street. 174, 175. So this is the leader now. So it's the most undervalued according to Simply Wall Street and according to the analysts. Costco was undervalued by both, but not that much. And Walmart was split. Simply Wall Street overvalued, analyst undervalued. How many analysts? 32. So if it's like 1, 2, or 3 analysts, it's not as reliable as if it was 32. I'm going to turn the AC on. 1 second. So if you're ever looking at it's only selling. If you're ever looking, and you could really pick anybody, but like if you said, oh, this guy's selling a lot of stock, 45,000 shares, most of us won't know who this person is, but you can just Google them. It's probably someone at the company. It's probably like an executive at the company. Okay. He's so the CEO, he's a CEO of the company. So most of these insiders, if it's not a big company, it'll be an executive at the company, like CFO, CEO, or it would be one of the founders, like a co-founder. Sometimes the founder or co-founder doesn't work at a company anymore, but they'll still own a lot of stock, and they're considered insiders. So still, the number of shares is not nearly as high as Walmart. So like 93 plus 82 is 175. 175 plus 24 is 199. It's about 200,000. So far, nobody's buying any company. There's not one insider buying even one share. So why should you buy a share? Because when people sell, they're not long term. I mean, unless you have like 10,000 shares and you're selling 2,000, that's fine. But if you have 10,000 shares and you're selling all 10,000, you're not a long-term person. You lost faith, or if you work there, then you're probably leaving, or you're getting close to leaving if you're selling, or you left the company within the past few months. Usually, if you work there, you're the current chief operating officer. You're not going to be selling that much. And if you do sell, it'll be like 10% of your stock. It won't be like all of it or 80% of it. So Dollar General has gotten crushed, negative 32%, and it's trading at $80. So this is definitely doing the worst in the past year. Dollar General. Who said Dollar General is gonna? Somebody said Dollar General. Oh yeah, DG going down, Dollar Tree going up. So 164. So this is the new leader. It's 51% undervalued by Simply Wall Street. Let's see. 28 analysts at 101. I'm just going to round it to the nearest dollar. So Dollar General is now the leader in both categories. Sometimes I think about the stock market like George on Seinfeld. Just do the opposite. Sometimes, like if I think like, okay, this investment makes sense because their PE is really low, like a 10 PE. The industry average is 20, and the stock is down like 80%. This seems like such a great buy. But I think be like George and do the opposite. It's probably, oftentimes, I don't know. I feel like, I'm not saying, I definitely made mistakes in the market, but a lot of times I was like, this seems so attractive. And I have invested, but often like a lot more than I actually did. A lot of times I just didn't invest. But I was like, damn, that looks so undervalued. And almost every time the stock kept tanking. And I'm like, oh, thank God I didn't invest. It's very rare that I wanted to buy a stock and it blew up. Like, I didn't want to buy NVIDIA, even though I feel like an idiot for not buying it. I never was that tempted. It always seemed overvalued to me. If like 5-6 years ago, if I was going to put a lot of money into NVIDIA, and I'd jump off a bridge probably. Okay, so insiders. So we have a mixture of buying and selling. So you can look at there's a sell recently, well, in September. So 6 weeks ago at 86. There's a couple of buys. Warren Bryant, I bet you he's like the CEO. Warren Bryant, he's a football player. He's a CEO, Warren Bryant. Okay, so let's say 11,000 and 1,500. DJ going, okay, I don't know. I lost a lot of money on, if you ever lose a lot of money on a stock, you'll hate that stock for the rest of your life. Like, you'll never want to invest in it. And if you make a lot of money, you're going to love that stock and you'd always want to invest in it. That's what I've noticed. But back in 2018, 85, wrote it up and back down. It's painful. I know. It's so painful when you're up a lot and then you don't sell. I generally don't sell many stocks. I try to buy it to hold it long term. But when I pick really good companies like Berkshire Hathaway, Meta, Netflix, and it works. The strategy works. I made the most money on picking stocks that were already really expensive. Like when I say expensive, I mean I bought Berkshire Hathaway when I think what is it, like 1 trillion now, or is it over 1 trillion? It's probably under 1 trillion because it came down. So it's pretty much a trillion. So I think I bought it when it was like 350 billion, the company's market cap, and now it's probably like 380 billion, and now it's 990 billion. So I made the most money in dollar terms, not percentage wise, because one share, I think it was, let me check I think it's 270,000. So I bought one share for 262,000. And now it's 682. So in terms of dollars, I made the most money. 682 minus 262, 420,000 on that investment. What happened? I have to close it open. If something's wrong with it, it keeps scrolling up. In terms of percentage, I made I sold my Apple. The only reason I sold it was COVID, but I kind of screwed that up. So I made about 1,000% on Apple. I put like 1,700 in. I can't remember when, like 2006 maybe. And I wrote it up to like about 17,000. So a 10x, like almost 1,000%. But I mean, people say percent is more important than dollars. So if you could make a 200% return, that's better than a 20% return. But you have to kind of combine it, because who cares? I mean, I made 1,000% return on Apple, but I can't like retire on $17,000. Like, it's not gonna change my life. And when I invested in Apple, I didn't have that much money to invest. The reason I put 260,000 is because I was older and I saved more. Okay, so where were we? So Dollar Tree. So Dollar Tree. So somebody said Dollar Tree is going up. Okay. 66. Well, they're really taking a hit, these dollar stores. 54. So that's overvalued. Let's see what the analysts say. Do the opposite. Do the opposite of what Kramer says. 85. So the analysts are pretty bullish. Simply Wall Street's 22% on the downside. Simply Wall Street is, the analysts are 26% on the upside. 26 analysts. Let's see if there's any insider activity. So there's one sell, but it's mostly buys. So this should give you confidence. 827 shares and like 740,000. So it's really this one company is dragging it up so much. Mickey Mantle Ridge. The CEO is Paul Halal. Well, I don't care about the CEO. I want to know about the company. It's probably just an investment advisor. Yeah, they're just professional investors undertake the stewardship of their. I guess as an investment advisor, I'm not really clear. What does Mantle Ridge offers financial services? They provide portfolio management, asset allocation, investment advisory services. So they're kind of a glorified investment advisor. The reason I say that is because companies that do portfolio management, asset allocation, it's just kind of like a lot of bells and whistles. There's nothing like, I don't like, this is what portfolio allocation means. Let me just format this better so it's easy to see. So the font's bigger. So like say you contact this company, this Mantle Ridge, and say you have $1 million. So they're gonna say, we'll construct a portfolio that's geared towards your personality. It's also going to be highly profitable and lucrative. So they take the $1 million and they put like 100K in this stock, 200K in this ETF, and then they just kind of like adjust it, because they'll say we will not have more than 10% of your portfolio in like say you so say semiconductors, say you said, I don't want that much in semiconductors. I don't like that industry that much. So no more than 10%. So say they how did that happen? Sheesh, why does it keep doing that? This is what portfolio managers pretty much do. And I don't want to like knock them or anything like that. They do a lot more, but this is kind of like the bells and whistles part of it that I don't think is that special. But they're going to make it like, oh, you go with us and we're going to, because people get the impression that the more time you spend on a portfolio, the better it's going to do. Like the more active I am. So I'm gonna watch your portfolio every day. I'm gonna be buying and selling at least once a week. That's actually the opposite. When I was younger, I had to use an investment advisor, especially for my retirement, and the more I thought about it, like, you don't want people in and out, especially when I was younger. They had to pay every trade, you had to pay money. So I was losing money every single trade, because sometimes it's like, 0.5%. If I just traded $5,000, I'd have to pay a fee. No fees now, but so just say, for instance, this was semiconductors. You put 8% of your portfolio in semiconductors, and this was an ETF and yada yada. But semiconductors crushed it because, say you just picked the semiconductor index. So it tripled, say in like a year, it tripled that investment, and everything else kind of, went up like 5%. So now your portfolio is, so you're happy, you went up, but the initial thing you said was no more than 10% in semiconductors. So now your portfolio makeup is 21% semiconductors, because it went up so much. Even though everything went up, it's just semiconductors went up so much. So they would have to sell maybe half your, or maybe a little more than half your semiconductor stock, and then spread it in these stocks. So that's pretty much what they mean by portfolio management, asset allocation. And people think this is such a complex thing to do. Like, oh my God, you're gonna be buying and selling, but I don't know. What do you guys think? I lost a lot of money on DJ, bought back, and that same comment. And they do this with a lot of things, not just like the size of the of your portfolio. They also do with like sometimes beta, and sometimes like dividend. If you say, I want my portfolio at least a 2% yield. So if for instance semis paid 0 dividend, right, and now semis tripled, your average yield would go down, because even though some of these others are paying like 3, 4, 5%, some of these others, your average yield goes down a lot, because if semis pay 0 yield, it was fine when your portfolio was only 8% semis. Now it's 21%. So that makes your average yield go down a lot. And people think there's so much complexity in this. You have to buy and sell and keep track. It's very simple. Like say your yield, I'll show you what I mean. The dividend yield. So say it was 0 for semis. And say, you can make up whatever these are. You could say this is spiders, this is Apple, I don't know, whatever you want to make, X. So this ETF pays a 2.2% dividend. Okay, I'm calculating the average yield for this portfolio, for this fake portfolio, but it's just the math. There's nothing. If you had your regular portfolio, you can just plug in, get the numbers. Say this stock pays a good yield, 3.4%. Let's just, I don't know, what's Apple's yield? Like, I don't know, 1%. Okay. So this would be your dividend payments for the year. So this semiconductors pay 0 dividends, but you like it, and you convinced. I mean, the investment advisor liked it. He kind of convinced you to go with it. At least you liked his explanation. This ETF pays a 2.2% yield, so you multiply that by your investment, and then that's how much dividends you get for the year. And this is 3.4%, and so on. So everything pays a yield except the semis. So total dividends is $29,000, and your portfolio at the beginning of the year was 1.2 million. So your yield is 2.4%. Now let's just say okay, and you said I want to get at least a 2% yield. For whatever reason, you wanted that. Let's just pretend this is 1%. Okay. So if you said, I want a minimum, at least 2% yield on my portfolio, and this is what it was this year in 2024. And this is 2020. Okay, let's 2023 and say this is what it looked like for the whole year of 2024. So your yield is 1.9%, even though all the investments are paying the same exact yield. Semis are still 0. That ETF is still 1%. This X stock is 3.4%, and so on. So your yield is now under 2% because semis, which pays no yield, went up the most. So in order for your investment advisor to meet all your specifications, he has to sell some of these semiconductor stocks, shares, and then buy some of these or something else in order to bring the yield up. So it sounds all fancy, but it's no big deal. Actually, I'll be right back. Okay. So let me know if anybody has any thoughts. So next is BJ's. Everybody knows, well, not everybody knows, but it's a pretty big store, pretty big chain, BJ's Wholesale. So that's up 22% in the past year, $85. It looks like these dollar stores took a hit. I think it was inflation that really hurt them, because when you sell products for $1, everything for $1, it's hard to you can't, you kind of get squeezed out of the market. You have to raise prices, or you have to and it's hard to raise prices because the name of the store is dollar store. So it's hard to if you can start charging people $2, and I think some dollar stores are $1.25 now, right? I mean, you could try to buy cheaper products, but the thing is, with dollar stores, they don't really have much control over what they buy. They just buy what's left over in other stores. If another store, it could even be a Target or Costco, they have too much inventory on something, like they just can't sell enough of something because it might expire soon, for instance. So the dollar store takes off their hand for like 10 cents on a dollar, and they sell it for $1, and that's how they make their money. But eventually they're going to get squeezed out because things just get more expensive. So it's 122. That's pretty undervalued, 30%. Let's look at the analyst target. So the dollar store near you, are they still charging $1? I thought somebody told me it's like $1.25, or 8610 21 analysts. Or there's an aisle for like $2. I don't know. I thought okay. How much Dollar General charge? How did I? Yeah, my wife goes to the dollar store. I've definitely been there, but I don't look at prices wherever I go. It's like a New York City mentality. If I want it, I buy it. If I don't want it, I don't buy it. I don't really look at prices. I mean, in supermarkets, if I'm buying a TV, I'm going to look at the price. Or if I'm buying something expensive like a car, I'll look at the price. When I go to the supermarket, I really don't. I just buy what I want to buy, what I need. And I usually buy the same thing every time. Dollar General does not sell items for $1. What are they selling for? More or less? Is like if you don't want to go to Walmart. Okay. Okay, so it's not a dollar store. Okay. But there are dollar stores. So Dollar Tree and Dollar General don't sell things for $1. Like everything's $1. That's at least a dollar store. Is Dollar General only $1? Even though Dollar General has the word dollar in its name, everything in the store doesn't go for $1. Their merchandise is just low priced. Okay, so got it. I don't know why. I always thought those were dollar stores. Shows you how often I go to these. So let's see the insider activity. So it's mostly selling, as we've seen. So 35, 135, 235. And then 2,500 purchased. So it's undervalued for Simply Wall Street. Ollie's. I don't think there's any Ollie's. I've never been to an Ollie's. Has anybody been to Ollie's? What's it like? It's up 20% in the last year. 95. So it's slightly undervalued. $103 and 15. So the analysts say it's 103, and it's 15 of them. Let's see if there's any insider activity. Only one person is selling, 2,900 shares. Nobody's buying. Yeah, Ali sells cheap chunk. Yeah, I've heard of it, and that's what I thought. It's kind of like Dollar Tree. But I thought there's a store that isn't. Which store? There's a store that only opens in really rural areas, and that's their kind of like business model. Is it Ollie's? Really, they open up in really low income and in areas with under 10,000 people. I think that's Ollie's. So if you live in a big city, you're not going to see an Ollie's. If I could. So Ollie's business model purchases merchandise directly from manufacturers. Yeah, I know that. And selling in small quantities, resulting in deep discounts to merchandise. Yeah, Ollie's is not a dollar store. It's just a low price store, like I guess Target. Ollie's acquired the assets of defunct. I thought it was Ollie's. Maybe it's not. Which dollar store only opens in small towns, like below like 10,000 people, something like that, and in really low income areas? Oh, that is Dollar General. Okay. Okay, yeah. Thank you. Winter is coming. So Dollar General has grown to become one of the most profitable stores in rural U.S. The company and its business practice have been subject to criticism. I thought they would talk about it more. I don't really see the operations. So in the first half of 2024, they shut down self-checkout in more than half of its stores. It's a good idea to let people check out themselves. It saves a lot of money, but it's just so easy to steal. At Costco, I do self-checkout now. And there's a supermarket chain. I forgot the name of the chain in my county. They still have self-checkout, but in a lot of areas in the Bay Area, they shut them down because they lost too much money from theft. And you can't do it. If somebody steals, like it's crazy, you can't even do anything. You just have to let them steal and walk out. You can't, you can ask them, you can confront them, but you can't like hold them. You can't like, there's nothing you can do. Obviously you can't hurt them because that's just illegal, even if they steal, but you can't restrain them till the cops come. Like it's illegal. It's like a form of kidnapping to restrain someone against their will. So you just have to let them go. I mean, you hopefully can get the police there before they totally leave. But chances are the police, unless the police are there already, they're just going to end up leaving. I'm in a Facebook investing group, and someone proposed a discounter that serves small, lower income towns. It was a suck business that has basically just cycled up and down for 20 years. Yeah, I'm sure there's a. Do you know the name of the business? I'm sure there's a lot of businesses out there, even small businesses with like a handful, like 2, 3, 4 locations that just have done awful. But that's like saying, I can't make money selling online. I'm losing so much money trying to sell products online. I can't find many people to buy my products and all this stuff. But you can't say that selling online is a bad business. Look at Amazon. Most businesses can be done well. It's just about execution, and it's hard to execute a really profitable, like a large profitable business. Like look how many locations they have. Like I would have a hard time running 2, 3 businesses by myself, let alone, what is this, like 20,000 businesses? Yeah, it takes a big team, a lot of. Yeah, there's a lot of like good sized companies. There's like a supermarket chain near me that has like 8 locations, and one supermarket is big. Lots of revenue, lots of inventory. So if you're controlling 8, that's a lot of revenue. But yeah, there's a lot of businesses out there that have generated millions, some billions of revenue that are still private. Like Medline, they're a medical device company. They supply medical devices to hospitals. 21 billion of annual revenue. They're privately owned. So they're one of the bigger, I think they're top 10 private companies in the world, in the US. If you get the funding to grow and scale, like my wife and I are opening our second location for her business. It took her 5 years to I wanted her to open up more and more and scale and grow, but it took her a while. On December 1st, we're gonna get a second, but I want to get like multiple. I want to get a 3rd, 4th, 5th, 6th, and we're doing it with cash flow. So we're making money in our first business, and there's plenty of money to open a second, because it costs like maybe $50K to get up and running. It costs more to maintain a business. It's going to cost like $10,000 to $15,000 a month just to maintain it, but hopefully we'll start bringing cash flow from the business. But not many people, even $50K, if we want to open up 5 locations, that would hurt. $250K just to throw out there with there's a risk, you might not make it back. Come on. Okay, these are going to be like, well, 2.8 billion is not that small. PSMT, I'm not sure what company this is, but Price Smart, $27.92. So that's up the past year. I'm not that familiar. Price Smart. Membership shopping warehouses in the US. They provide basic label products, member selection, groceries. So it sounds like Costco on a smaller scale. The CEO's name is Price. You thought the name is just because price, a low price, but he just used his last name. It happened to work out really well. In addition, the company offers food and bakery services as well as health services such as optical. So I'm not too familiar, but it sounds like it's kind of like Costco on a smaller scale, or BJ's, or so it has, okay, but it's still impressive if you, I'm sure this guy is really proud of himself. It's still impressive if you can grow to 28, 33, 36, 38, 40, 52 warehouse locations. That's pretty impressive. Like I said, my wife and I, well, she runs this business. It's a small business. It brings in decent revenue, really, really good margins, but we're going to open our second, which is a big deal. To have to manage a second, it's hard enough to manage one, and finding people to work there. And we're stressed out about it. We don't want to be like end up being shorthanded and lose money. And it's a small business. I could only imagine 52 warehouse stores. That's 52 really big businesses. Like a warehouse has probably 200 employees. One store, maybe more. I think bin stores are also eating into discount bin stores. You big stores, right? You meant Temu is probably a bigger problem, though. The U.S. government just closed the loophole Temu and Shine were using to undercut Dollar General, Amazon, and others. It goes into effect in the next 12 to 18 months. So this could be a really good investment opportunity, because not as many people are looking at it. Maybe I should do a video on this company. Let's see. Simply Wall Street does not think it's a good opportunity. They say it's 100% overvalued. Let's see. Analysts are 92. Pretty much where they're trading at, exactly where they're trading at. And there's 3 analysts. So you would expect less analysts are looking at smaller stocks. You could see the most analysts are looking at Walmart. Then, ironically, it gets smaller as you go down every single time. Well, it's tied right here, but goes down, 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 because analysts are it's a business too. So they want to publish. If they're going to spend a lot of time analyzing a stock, they want to publish their findings to a large audience. And if like 10% of the investing community is looking at Walmart and Costco, you probably want to put together a report on Walmart and Costco. And if only 0.5% of the investing community is looking at PriceSmart, you might not put out literature on it. Of course, there's less people. So if you're the only person putting out information on PriceSmart, there's 3, but if there was only 1, then maybe it makes sense. But generally, you want to. It's kind of like when I do videos. If I do a video on a Apple, it probably will get more views than a PriceSmart. No. Bin stores resells Amazon return items. People buy pallets of returns and resell them for cheap. Bin stores. Hey, Dex, what's up? Bin bin stores. Okay, what is a bin store? And it's a retail store that sells overstocked, return, and clearance merchandise from major retailers. Okay, so it's like Ollie's or Dollar Tree. That's what they sell. So there, I guess you call them bin stores. I never even heard of that term before, but bin stores in the U.S. They don't list. What are the best bin stores? Okay, so let's look at insider activity. It's all selling. So 79, 82, 84, 85. No, right. I understand bin stores. I just never heard that term, but they just sell overstock merchandise from like stores like Amazon and Target. When they have too much or they can't sell, then a bin store buys it. But dollar stores, I guess, are bin stores. And Ollie's is a bin store because that's what they buy generally. They buy items from when excess inventory items. Or a lot of stores like Ollie's and Dollar Tree and Dollar General, they also buy inventory from bankrupt stores. A lot of stores go bankrupt, like not just brick and mortar stores, but online stores, and they buy all the inventory. So if you had an online business and say you had $1 million of inventory at any given time, and you just were losing too much money, you might contact Dollar Tree and say, I have $1 million of inventory. Would you buy it for $500,000? But it doesn't seem like I can't find. Like when I Google example of bin stores, nothing comes up. It talks about stores that sell bins, like waste baskets. Okay. So yeah, so did I put that in the chart? Okay, so 85,000. TGT. I definitely never heard of TGT. Triple B Foods. It looks like it's a newer company. It's trading at 34. Let's learn a little about it. Triple B Foods operates grocery stores in Mexico. It offers household cleaning, personal. It always bothers me when I see a typo. I don't know why. I'm not upset if I see a typo. It jumps out at me. Like it's so glaring. So hygiene without the G. I make typos all the time though. So I try to reread it multiple times, but sometimes I still send emails with typos in it. Like I send an email to somebody and they respond back to me. And then I read my original message and there's a typo in it. So I'm not saying I don't make typos, but it just jumps out at me when I see it. When you make a typo, you're less likely to see it. You keep seeing it correctly each time you read it. Okay, cosmetics, pharmacy, dessert, food and drinks. So it looks like a kind of a smaller scale. It's a grocery store. It's not a warehouse club like Costco. They have private label. It serves low to middle income households through online channels. So it's a Mexican grocery store. It's probably pretty popular in your, if it's in your town in Mexico. I'm sure it's pretty popular. Sounds like, especially if it's trading in the United States. Without digging into it, looks like it might have decent growth. Yeah, it's a good market. I think Mexico is a good market because there's so many people. It's a huge. What's a population? Like 200 million? I'm probably way off, but I'm thinking 200 million. 131 million. Wasn't too far off. So yeah, it's a huge population. But I think it's a big place. It's not, I mean, it's not US big. US is massive, but it's still a decent size. So you'll have more densely populated areas like Mexico City, where there's a lot more people living per square mile. But if you live in one of the outer towns, it may not be as populated. So that looks interesting. So did we get the valuation? Or okay, let's see what Simply Wall Street says. 73. So Simply Wall Street agrees. Eight analysts at 31. So it's overvalued. So it IPO'd. It's getting close to a year, I guess. February 2024. $20 IPO. And it's done really, I mean, if you bought it at IPO, you would have never been in the red. I mean, you would have pretty much been flat in April. But you pretty much would have never been down. You're up 20 to 34. So you're up like, what, 70% right now. So look, this looks like, yeah, good value. Let's look at let's look at the insider activity. So no insider activity. Sometimes with non-US stocks, there is insider activity. It's just that websites like this just don't get the data. Oh, so it's the leader for Simply Wall Street. It's the most undervalued. So there's just a quick way. I mean, it's not. I mean, I've been on the call for an hour and a half, so it's not that fast, but. Or whatever companies you wanted. I think it's good to do companies in the same industry. You don't have to do, you could do 5 companies, for instance. And then, like, if you really like discount stores, then you could use this as a starting point to dig into, like, for instance, if we like TGT, we can now we could dig in a little bit more, learn about the company. So Dollar Tree is the most undervalued for the analysts. And I have a feeling TGT will be doing the best. TGT probably is up the most. It's been out 9 months. It IPO'd at 20. Now it's 35. So it's up 75%. So it's up the most. And it's only been out 9 months. So it's doing the best. So I'll put that in here, 75%, because that's probably so let me know if anybody has any other stocks. And Triple B Foods, it's trading on a major exchange. It's not like trading over the counter. And the market cap, I don't know why this website says 400 million. It's 3.8 billion market cap. So it's not that small of a company. It started around 2 billion when it IPO. Now it's 3.8 billion. So it has some size to it. I don't see it. The website has to be here somewhere. Okay, here. TNDOS in English. Stores. Okay. So stores 3B. Triple B stores. Yeah, sports stores. That would be a good idea to do a video on those. I think the presentation is usually pretty good because it's a little more user friendly than like the 10Q or 10K. Let's see, 2Q highlights. So in the second quarter, they opened up 121 stores and 1 distribution center, because in order for the stores to get product, they need distribution centers. So 1 distribution center may supply the inventory for like 50 stores. So you generally want a distribution center close to, like if a big, like Mexico City, say there's 30 stores in Mexico City, you want a distribution center pretty close to Mexico City. So they have 2,500 stores. That's more than Costco. I mean, they probably, Costco has 890 stores, so a lot more than Costco. I mean, the stores are smaller, of course, because Costco is huge. And 16 distribution centers. So the distribution centers are kind of geographically located, so a store doesn't have, it's not too much of a distance between a store and a distribution center. Like if a store is really close to a distribution center, like a 10-minute drive, that store will probably always be in stock. Items, they'll never run out of stock. But if you have a store that's, an hour drive from a distribution center, then that store may be out of stock on popular items fairly often. TBB reminds me of Academy when it IPO'd a few years ago. It IPO'd well below what it was worth. Same store sales, 11%. That's a good thing to look at because it's hard to, sometimes when you look at a company's revenue, say it was like, say their revenue went from 100 million Like say 2023 revenue 100 million, 2024 150 million. So you're like, oh my God, yes, 50%. That's pretty good growth. But that doesn't really mean the stores themselves grew. It just might mean they open up so many stores. And so that's why same store sales, it kind of gives you an idea of how well the brand is doing. So if same store sales were like 20% from 23 to 24, I'd be, so total revenue. So for example, if same store sales was like 2%, it wouldn't really, it wouldn't be that impressive. So if this was like company A, I mean, you want growth, right? You want to, and if company B like if company B was a 20% revenue growth, which is much lower than 50, but same store sales is 20% because it's all organic. They didn't open up any new stores. That would impress me a lot more. This doesn't impress me that much because sure, they opened up a lot of new stores, or they acquired a lot of new stores. Maybe they bought another business. So it wouldn't impress me that much. Just buying new stores, opening them, it costs money to do that. But if same store sales are going up, this would be much more enticing as an investment. I mean, it does beg the question, why don't they open more stores if they're so successful at they're running their stores? How come they didn't grow by more stores? Maybe they felt it's super like geographically specific. It's only in Montana, for instance, they have supermarkets, and it's kind of saturated the whole state, and they're just focusing on growing within the state. And revenue, 13 billion pesos. Okay. So it's 20 to 1. So you have to divide every number by 20 to get the US dollars. So 14 billion over 20 is like 700 million. Yeah, 700 million. So revenue 700 million for the year. Is that it's for the quarter. For the quarter, 700 million for the quarter. EBITDA, it makes it hard when you divide by 20. It's not like there must be a quicker way to do this. So 35 million. Okay. Oh yeah, that's a good way to do it. So 35 million of EBITDA, operating cash flow. So these are number of stores. So they're pretty aggressive with acquisition or opening new stores. In 2020, they opened 150 stores. 2021, 250. Then 392, 396. They've already opened a little over 200, 215 in the first half. So probably going to be like a 400, between 400 and 450 for 2024. I wonder if they're opening up their own stores or they're acquiring other supermarkets. Here it is. The guidance for 2024 is 380 to 420. Revenue up 27.5%. Financial results. Okay. EBITDA up 43%. That's pretty good because revenue is only up 27. So EBITDA is up a lot more. That's the thing. A lot of working capital, a lot of CapEx spending. Working capital negative 4.6 billion. Okay, business model continues to generate significant negative working capital. Working capital is current assets minus current liabilities. Significant negative. I wonder why they highlight that. Grocery stores operate with negative working capital because while they receive payments immediately against sales, they pay their suppliers later. This means the value of their current assets because I guess that's just how it is. So working capital is current assets minus current liabilities. So they have a really low current ratio then, because current ratio is current assets over current liabilities. So you want to have more current assets than current liabilities generally, because you want to be able to cover all the debt that's due or the payments that is due within the next 12 months. So current assets, cash, plus accounts receivable, plus inventory, minus accounts payable, plus current debt. And there's a bunch of other things, but those are the popular ones. So what they're saying is they don't keep enough cash, accounts receivable, and inventory on hand to cover the debt, to cover what they owe. Because accounts payable is what they owe their suppliers when they buy inventory. So they don't have enough on hand. So they're always kind of like behind the 8 ball, I guess. It's a really efficient way to run a business to not keep that much cash and inventory on hand. It's much more efficient to sell it, to use your cash. But obviously, if things go way south, you could go out of business because you at any given time you don't have enough money to pay your current debts. But there's a lot of cash that's going through the business. Every day there's tons of cash coming in. So that's why they can maintain this. If it was like a bigger company, like an aircraft manufacturer, where they don't have as many customers, they need to keep enough money on hand because you don't sell 1,000 planes a day. You sell maybe 5 a day. Sometimes you sell 5 a month, depending how big the company is. Okay, so I guess it's okay to brag about not having enough money to pay your bills. As long as people understand that. Okay, here's revenue for merchandise. 13 billion. They sell recyclables. I wonder what that means. I know some stores you can recycle, like cans and stuff, but I don't know what sales of recyclables mean. Do people sell them something and then do people sell their own I don't think people are selling food back to them. Maybe people are selling electronics or something, stuff I'm not sure what this means actually. Sells recyclables. It's pretty small, I guess, but cost of sales. So gross profit, 2.2 billion, 17% gross margin. It seems okay for this type of business. I think 20% is kind of like your goal, but maybe for a grocery store, that's probably okay. Operating profit, so 2.8% margin, which sounds about right. Usually it's 1 to 5%, depending on the type of grocery store. Costco has bigger margins, probably close to 7-8%, and then Albertsons probably 2-3%. So margins look much better, 2.4%. Last year is 0.7%. So they're much more profitable, I guess, because sales went up a lot. EBITDA, the EBITDA margin is 5%. That's probably in line with grocery stores. Statement of cash flows, 450 million, a little more than last year. Last year was 416 million. They had a big negative in short-term bank deposits. Huh. I don't know why that would be here and not down here in the financing section. That sounds like they're paying back debt. See, short-term deposits are, it's like a savings account or checking account. You put money into the bank, and you earn interest on it. But they're negative. It's a big negative. So I wonder, it looks like it's to pay back debt, but I'm not sure. So they do factoring. This is payments on reverse factoring transactions. Does anybody know what factoring is? It's you kind of sell your receivables to like a loan shark. Like say you have if you have $1 million of accounts receivables, like you're owed $1 million when you sell product. So you would go to a company that offers factoring, and you would say, give me $1 million. And when I get paid for my customers, I'll pay you $1 million plus $1,050,000. I'll pay you a little extra for kind of loaning me the money. You have to give them purchase orders or receipts, so you can prove you actually sold $1 million. Okay, I guess we'll end it here. I think we went through enough. I haven't seen a comment in a while, so okay. Well, thanks for joining, and I'll see you maybe next week.